We are buying a $90,750,000 property, and here's how. So as most of you guys know, Ross and I have been in business for, 22 years?
23. Actually, 23 almost.
23 years. We've bought billions of dollars worth of real estate, tens of thousands of units, and we're very excited about this particular property, Alta, Nevada.
Right. We've been looking for another opportunity for 2+ years now since we had an acquisition.
And it's hard because when you have the horsepower to buy something and then you don't, it takes a lot of discipline.
Right.
But we are ready. Even with interest rates that are higher, this is an incredible opportunity for us, and we're excited about it. So, Ross, you always say every property has a story. Let's tell this one.
I do always say that. And one of the things in our 22+ years of doing this now, this is the first question you and I have asked anybody that presents a property to us.
Sometimes they don't have that answer.
And many times they don't have an answer.
But there needs to be a story for us to be able to buy something.
So the story could be property that we could buy that would add value through renovations. It could be a property that we're buying because it is long-term ownership that has been lackadaisical about operations and has opportunities in terms of increasing rents and improving occupancy. And it could be a story that the property has such intrinsic value because of its position in the marketplace and because of what happened in the cycle. And I think that's the story with Alta NB.
Yeah, it is. And we're going to talk more about this, but the one thing to mention is you and I have a significant investment in this deal.
Yes, we do.
This is how much we believe in it.
Yeah.
Right? We got, $2 million in?
$2 million going.
Yeah, so we're personally putting $2 million into this deal. But this particular property is built way below replacement cost.
That's correct.
Ross knows a few things about replacement costs. We have, 5, 6 projects under construction?
2 projects under construction, 4 projects in development. So we are completely in tune with what construction costs have been and we think what they're going to be. Our experience in new construction is, again, 20+ years, 5,000 units that we've built almost. And so we understand what it takes to get one of these things built.
So we're going to buy this property. We're in escrow right now for $261,000 a unit. Let's put that in perspective, because what would this property cost today if we were to build it?
Oh, I think today we'd be plus 300. A bit of that.
So we're below replacement cost, but really the compelling reason in the story is that, but it's also the fact that it's severely undermanaged.
That's correct.
So we believe that there's at least $200 inside of the rent roll per unit. So just that equates to over $800,000 in income lift over, of course, a couple of year period of time. We're not going to get that right away, but the cash flow in year one is just about $1.2 million, but then we grow it to over $2 million just within a couple of years, and just from what's sitting in the rent roll today.
Right. What's interesting about this is that it's owned by an institution. It was a joint venture that they did with another developer. They were expecting to sell it at the top of the market in 2022 or 2023. They were not able to reach the expectations they want, and now, because they are tired of it. They weren't not expecting it to own it this long. They have been lackadaisical about operations, and we'll be able to take advantage of that.
So the first thing what we do whenever we're entering a new market like Las Vegas is we both believe that the market is more important than the property, right?
No question.
Yeah. So things like population growth and employment growth and vacancy in the area and new construction, all of those things severely can affect operations. So this is one reason we like Vegas. However, from there, you got to drill into the submarket. And the submarket, particularly this one, Green Valley, Henderson, is a higher end area of Las Vegas, because there are definitely areas of Las Vegas that you do not want to be in. That is for sure. What that means is there's high crime and things like that. This is not one of those areas. In Henderson, the average home price is around $600,000, but in this particular area of Henderson, they're in the $2 to $3 million range.
Right. There's only 485 units under construction currently. No new units within a 3-mile radius, and that is really important because this will allow us to compete well in the market and not have to worry about competition coming online.
Yeah. So when you buy a property for investment, what you want is a big delta between rent and mortgage. And that certainly checks that box. You also want low crime. You want really good schools. You want proximity to all kinds of really good things. Like in this property, Whole Foods, Lifetime Fitness, those kinds of things. That's called a walkability. You want those kinds of things. Those are the things that landlords love because you're going to keep your residents there longer.
Right. And there are recreational opportunities next door, literally. There is a walking and biking path that goes along the backside of the property that our residents will have access to, which allows them to safely participate in those activities without any traffic.
Yep. And there are some negatives in Las Vegas that you always have to look at. So one thing about Las Vegas is that it has higher turnover than normal.
Right.
Because it's a 24/7 city. As we all know, it's anchored by a casino. They're trying to get away from that. But it also has a pretty high unemployment. But in this particular property, which we've already done the due diligence on, the residents that are living there now are very stable.
That's correct.
Yep. So we're done through due diligence. We've checked all those boxes, and we're proceeding to close here by the end of August.
That's right. And we're looking forward to having a new asset in a dynamic market like Las Vegas, and particularly in an area like Green Valley, which we believe has tremendous upside.
Right. So one of the things that Ross and I always make sure of any acquisition is that cash flows on day one, right?
Correct.
Yeah, because that's more important than anything. A lot of syndicators buy properties based on future cash flow. We just do not believe in that. It needs cash flow day one, and then there needs to be some kind of compelling story.
Right.
In this particular case, our projections are to grow them by over $800,000 to $900,000 on the income side, which is, of course, going to drive a lot of value in the project.
And one of the things that we're using good long-term fixed-rate financing, 7-year financing on this deal. With
low loan-to-value, too.
A low loan-to-value, I think it's for 55%.
Yeah. So that's good. So that means we're putting 45% down. That's what that means.
Yeah.
So that means the payment's lower, obviously, and it's all agency, so it's government, Fannie or Freddie, right?
So we've eliminated the interest rate risk going forward, and we have fixed our biggest operating expense at a level that we are sure is going to stay the same for up to 7 years.
So let's talk about exit strategy, because that's always a question. We're a little bit different. Where Ross and I, we believe we should own properties long-term and have the cash flow long-term and just continue to harvest the equity out through cash-out refis, which, of course, is tax-free. So when you put new debt on there and a refinance, it's tax-free because you're not selling it. When you sell, there's tax. When you don't sell, there's no tax. So that's certainly, we don't know how long, but at least 5 years to 7 years.
Right. We look at a 5 to 7 year horizon. And like you mentioned, our number one capital strategy is improving operations to refinance the property.
Yeah. And cash flow along the way, provide value for the investors. And then, of course, once the investors get paid back, then everyone gets paid.
Right. And I should point out, too, that we don't ignore the market. If the market tells us to sell it, then we will sell it.
Yes.
But like we said, we like to limit our risk by refinancing and returning our investors' equity and enjoying cash flow going forward with little to no investment.
And we also think that in about 2 years, there's going to be a severe supply issue with apartments. And that's...
Oh, yeah, there's no question.
Yeah. That's because interest rates went up so much.
Right.
So, as builders, when interest rates went from 4 or 5 to over 9, people pull back. That's precisely why we're actually building some projects right now.
Right. We're looking at building some projects because it's a counter-cyclical move. It makes sense to do so. We can negotiate better prices with our subcontractors, and we will be bringing the properties onto market right when the market's improving.
Yeah, it takes 2 to 3 years to deliver something. So anything that's hitting the market today started 2 or 3 years ago. And also 2 or 3 years ago is when the interest rates started going up and everybody started to pull back. So you're going to see a big shortage of apartments specifically in about 2027, 2028, and you're going to start to see some rent growth. So as a betting man, I would guess that this market's going to get really, really tight in 27, 28, and that would probably be an incredible time to look at either exiting or refinancing or whatever it might be.
Right. Interest rates seem to be wanting to go down, too, sometime in the next couple of years, so we'll see what happens.
Yeah. So it's all based on those market factors at the time.
Right.
I can assure you one thing, the property's going to be very well managed.
I can assure you that, too. Operations make or break a deal, and our people are the best there is at improving operations.
We're excited. It has the lowest rents in the submarket. We're buying it below market. It has a lot of operational increases there, both on the expenses and certainly on the revenue side. So we're excited about this deal, but also we're going to be buying more stuff in Vegas.
Right. We like the dynamics of the Vegas market. We have had experience in Vegas.
So if you guys want to partner with us, let us know. Just click on MC Companies /new deal, and we'd love to have you in our deals and talk to you personally as well. So let us know.
Thanks.
I have a real estate company with over 10,000 units, and I'm going to break down how we analyze a $100,000 property versus a $100 million property.